Hello, hello. Welcome, everybody, to a special Trevillian Next, live from our headquarters here in King of Prussia, Pennsylvania. No retakes, no edits. We're live and anything goes here. My name is Keith Daly, Director of Banking and Fintech here at Trevillian. Trevillian partners with community banks, BaaS banks, neobanks, fintechs across the country for executive search and talent advisory. Please visit our website at www.trevilliangroup.com to learn more about our firm, recent placements, and check out our content channel, which is growing every day. You can also follow myself and Trevillian on Twitter, Spotify, and LinkedIn. As for today's event, Trevillian takes immense pride in providing relevant and insightful content. And today we have two innovative executive leaders in the world of community banking and fintech. First, I'd like to introduce Nikhil Lakhanpal, co-founder of Narmi. Over a decade ago, Nikhil and co-founder Chris Griffin ran the Georgetown University Alumni and Student Federal Credit Union. They didn't expect everything to be top of the line, but as they sat as CEO and CTO of their own financial institution, they pondered a simple but very powerful question. Why is delivering industry-leading digital experiences so difficult for financial institutions? After graduating and pursuing careers in banking, they reunited in NYC, and they still wondered, why do digital tools available for financial institutions, why are they lacking today? So they got to work. Nikhil and Chris founded Narmi with one simple mission: offer financial institutions the best digital banking platform in the industry. Today, financial institutions with billions of dollars in deposits use Narmi to increase deposits, profitability, and accounts with tools that make it very easy. Since 2016, Narmi has grown substantially and closed their Series A funding of $20.4 million late last year. So thank you, Nikhil, for joining us. Appreciate you being here. Next, I'd like to introduce Brian Johnson, President and CEO at Choice Financial Group. Choice Financial Group is headquartered in Fargo, North Dakota, and began in 2001 with the merger of 4 local banks with collective assets totaling $170 million. Brian Johnson has been with Choice since 1999 and has served as president and CEO since 2011. Brian has helped grow the bank to over $3 trillion in assets, nurturing consistent growth and innovation across the Midwest, while never losing sight of the people or the communities they do serve. Moreover, Choice Banking as a Service division has expanded into the fintech industry, first partnering with Lili in 2018. And since then, Choice has gone on to partner with other fintechs, including Current, Doe, Lili, Mercury, Cube, and Unit. We've known Brian for years, and he is one of the most genuine, down-to-earth leaders in the industry. And he's a wonderful leader for a community bank in this digital age. So thank you very much, Brian, Nikhil, for joining us and our audience today. So I wanted to start on the topic of talent, which is very dear to us here at Trevillian. I wanted to start with you, Brian. You mentioned that there's a glamour that digital and fintechs bring to community banking. But we also know you've got a strong opinion about the risk they inherently create. From a talent perspective, how can a bank best protect itself when diving into digital banking, or in your case, BaaS banking?
Yeah, thank you, Keith. Good afternoon. This is an area for us that's been at it a while, and there's a reason it's been at it a while, because you have to get the team on board and your perspectives and your objectives set very clearly. As Keith mentioned, there is an appeal to it, maybe like crypto or Bitcoin in this space for community banks, and there should be. It is an interesting array of possibilities. For us, like I said, we've been at it 5 years. We've had strong legal counsel and consulting partners through it. always not the biggest advocate for doing that, but in this space, given its freshness and very, very, very fluid in terms of the directions it can go, I do strongly advocate for outside help too in that. When it comes to employees in and of itself, I think just the bank and the fintech folks are on the same page. If not, you're going to have issues not only within your own walls, but I would certainly say from a regulatory standpoint too as well. That presents a lot of challenges, and so I think the team needs to understand the differences and amongst the products and services that are out there, and that just takes time to form that team, formulate that strategy. But there is a lot of interest and even for banking in general, which is probably not a sexy business to attract young talent. There's certainly appeal from the fintech space in order to draw in that talent. And for us, that's been exciting. It is fresh, and we look forward to the path ahead on that end.
Thanks, Brian. And yes, I can concur on the talent war out there right now for innovative digital banking talent. So Nikhil, Narmi is a highly trusted vendor for community banks in their digital transformation roadmaps. What are some best practices on a talent, organizational, or management front that you've seen at your clients that really have helped them make this process a success for all?
No, yeah, definitely, Keith. And just want to say thank you for having me and for
course.
everyone
Thank
attending.
you.
And Brian, it's great to be on this panel with you. Yeah, we have, I feel really humbled that Narmi is able to work with a diversity of financial institutions, both in terms of size, but most in core priorities, goes on and on. But I will say culture is one of those items. And it often, it's funny, I think it really does matter more than what core banking system you're on. Or, one of our very early customers is still on a core that is definitely at the bottom of the list in terms of innovation and priority at that core banking vendor. And they're still able to do a tremendous amount of amazing innovation on the front end because of their culture. So I think your question around the culture at these banks matters more than most people think. I would say a couple themes. It starts top down. I firmly believe that more than anything else. If the CEO and C-suite are not aligned, are not thinking a certain way, and are not going to work in order to make a digital initiative or whatever initiative happen, it all falls apart. And, as a leader of Narmi, I also kind of operate the same way, and there's always 100 priority ones. So what are the actual one or two that will get across the finish line? And if it is digital, it will happen. You can find every reason in the world that not to do something, right? Not to open accounts online, not to collect a driver's license during account opening, not to offer wires to consumers. There are 100 reasons why you should not do that. But at the end of the day, that's where the world's going. And those institutions that truly have a top-down approach figure out a way to make it a reality. So that's really what I personally look for when I get to meet, prospect management teams, because we do truly believe, it's a partnership when we work with our banks, and we want that buy-in from everyone. So I'll leave you with that because I think it's so important, but I'm happy to dive in further.
No, I'd love to kind of get Brian's response there, because Brian, we've spoken a lot about culture and your culture at Choice Financial, and sometimes you have new technology, new employees coming in, and you might have some legacy. Or from your perspective, Brian, the culture change at Choice, how has that been? Has it been a struggle at times as you've moved more into BaaS and fintech? How does that work on your end?
Yeah, we've had plenty of activity here at Choice just on the traditional bank side with our growth. We brought in some acquisition merger partners in the traditional sense, and so that is taxing on a team. And then you bring in a new line with a new line of thought process. And, for instance, one example I would say is the word change management decisions has vastly different meanings between the legacy team and a fintech team in terms of the pace that change management has to go. Back to the core areas like Nikhil was saying, you're on the traditional bank side, you're subject to that core and their pace and their response. The fintech community doesn't operate that way. It's either more like a drive-through at McDonald's. Here's what I want. Can you deliver it? And is it going to be right? And is it going to taste good? And so I think to try to totally align those type of visions, it can be done. But back to the talent side, what you're asking, you have to have the folks of the mindset, and that's what Nikhil is going. You want, for my role as CEO, for the legacy people to understand what they brought to the table, why we're here, who's paid the bills up until this point, but also have them on board to say, where the consumer is going is where we need to be, and at Choice we try to do it under a people first tent and have a people first experience. And so in the fintech world, that might be an FBO relationship of what we would describe as a non-direct customer. Can we still be a people first bank to those non-direct customers through servicing who is our customer, the fintech? And we have our direct customers on the legacy side. And so back to Nikhil's point on the culture, if you truly have people who believe, and for us, we define as that people first experience and define who that customer is, at least everybody in shop then is aware of what the objectives are, why we have them laid out that way, and how we are going to get there. But definitely pace is a topic that comes up quite frequently at Choice, pace of change and embracing that change. And you just try to manage through that.
Yeah, speed at fintechs. It's interesting. And Nikhil, you built Narmi from the ground up. I think you just had your 5-year anniversary a few months ago. So congratulations on that. What type of culture did you want to infuse at Narmi, and how has that culture kind of changed over the past 5 years, especially in regards to your relationships with community banks? Fintechs move at a faster pace sometimes than community banks. So I just wanted to kind of learn how the Narmi culture was built.
No, for sure. It's a broad question, which I could probably spend an hour on. And it's everything from employee culture to company culture to the culture we want to create with our customers. So I'll just keep it a little bit broad at the risk of boring.
Yeah, of course.
I will say, when my co-founder and I, decided to start Narmi, and we always wanted to keep the problem at the forefront of what we go to work for every day, and in that respect, apply a product-based culture to it. And honestly, that is what we also felt was one of the main things missing from what now are, Narmi's largest competitors, where their culture is more, some of them are more of a sales organization. Some of them are geared to solely be a public company and operate that way. But what we didn't find is a product-based culture in this space, in digital banking. And it's very ironic, right? Because digital banking is a product. And then you couple that with all the innovation happening in SaaS, which stands for software as a service right now. You think about companies like Slack and Salesforce, and the list goes on and on, that are doing so well. Adobe has completely pivoted their business model, and all of those successes have been on product-based culture. And we just didn't see that in digital banking. So I will say that drives us, that motivates us. Every time we see an uptick in engagement or transactional activity, or we take a feature that, quite frankly, we weren't receiving negative feedback on, but we 10x it, because that's what we do, that is what motivates us every single day. And in turn, like leads to more business, leads to more banks and credit unions buying our product, doubling down on us. And it is sometimes at odds, and I know this is on the agenda to talk about a little later on. Most banks don't have a product-based culture. They have a compliance-driven culture, or they have a operational-driven culture, or they have just a let's sit there and chill culture. So it has been somewhat a challenge to bring that product-based culture to our customer base, but we knew that going into this. Like we knew it, and that's why we do a ton of content marketing, a ton of product marketing. I mean, just check out our website. Our resources section is full of exciting what's Narmi working on and why. So again, like I said, I could go on and talk about our people. That is so incredibly important to me. But I think for this audience, that product-based culture is one part of Narmi where I am fighting my hardest not to lose, and as we scale. Like that is last thing I want to do is be a 15-year-old company with hundreds, if not thousands of customers, and then turn into what we set out to not be. So that is what I'm fighting every single day, year for. And I'm really proud to say 6 years in, we've kept it. So hopefully that's helpful.
No, that's great. And that's great. And that kind of segues into the next question for both of you. A lot of banks, they look to their CEO, CTO, or CIO to be the catalyst for digital change. However, finding visionaries may be easier than finding executors. What advice would you give banks on how to best implement their digital game plan? And is there a skill set lacking, just as you said, Nikhil, on the community bank side, such as product managers, digital engineers, software engineers, roles like that community banks should be looking at now and in the future? I'll let you go first, Brian, since Nikhil was just on.
Yep. I'll build off Nikhil's answer. We always say here, risk doesn't lead the process, but they're definitely at the table, and we need to be very attentive to that in where their role is and how they can assist and partner here at Choice. I agree with you, Keith. The vision part, right? That's always the fun part. And there's always dreamers, and that's how we define it. We believe we have the dreamers, and then we have folks that can kind of come along and complement that and try to execute that. And for me, I think it's a path of understanding, to your point, on the build and the software talent build. And we do build software here at Choice. So for banks out there, and I hear this often, I want to be part of fintech. And so how do I? And to me, there's a couple paths of that. You see what we've built at Choice over a 5-year process in terms of trying to bring in that talent, that diversity of roles and alignment operationally, and spend that money and build that way. And hopefully you develop product and relationships over time that meets the market's expectations. And then there are a lot of funds that have gotten started or are in process of getting started where the banks can stroke equity checks and make those investments. And I think that's how this audience should look at that, to say, well, if I don't want to go through this process of the talent and the risk and the requirements that are out there and spend that money, if that spend would be $3 million over a 3-year period or 5-year period, should my bank be looking at doing $3 million worth of 10 equity investments at $300,000 a piece in fintech companies like Narmi and others, and participate in the process that way of getting an ROI back? I get it might not be where the customer growth is, but it is such a long-term investment of aligning those visionaries and executions specialists in the field. From a CEO or CIO, or we were interviewing last week for a CTO, and we're hopefully going to bring that position on. It's continual, it's daily on that end of it, and it's a dedicated process because it can go in a number of different directions, especially given a lot of our staff's remote, not on site, not in the same facility every day. And so, some Mondays it's maybe herding cats, but by the end of the week, I think, we keep them on the same page and rowing the boat in the same direction, hopefully.
No, thanks, Brian. And Nikhil, I guess, I know you have a lot of thoughts working with so many different community banks, maybe skill sets that are lacking, such as product managers that you don't really see on the community bank side. I work with fintechs. I've placed product managers on the fintech side, and every time I look at a website or see something on Slack, it's product managers, engineers. Do you have any thoughts on maybe community banks moving into that space?
Yeah, look, I think building off my last answer around the culture Narmi's created, I certainly do not expect nor encourage banks to turn into product companies. You are blessed with the government backing of a business model, which can be incredibly lucrative. You play a irreplaceable role in communities. You make dreams come true, quite frankly, for both consumers and businesses. That is why, like, I love this company and I love what we do. Like, all of those things are really special, especially to the United States, because any part in the rest of the world doesn't have the regional and community financial institution presence the United States does, which makes it even cooler here. But I'm asking you to meet me maybe 25% of the way there. And maybe, I think the most helpful hires are more product oriented people. I'm not saying hire 5 or 10 of them, but someone we can truly work with on the other side to convey release notes, to manage roadmaps, to, get product feedback, but also like in a respectful way, to iterate, to pitch new products to justify ROI. I mean, it's, to me, to us at Narmi, what we do is we believe we are the most important partner / vendor to a bank. Like that is what our team genuinely believes, because at the mobile online banking and the account opening sides, like that is what is driving banks forward in terms of organic growth. But that's a full-time, imagine not having a person or a team dedicated to that most important channel. It's kind of at odds with each other, right? So I'm trying to, especially our customers and our prospects, I'm trying to bring out a more product-based culture where they don't think of it as like buying a vendor. They think of it as buying a product, and they do understand it's not the end of the world to have 1 or 2 FTEs support that product from a product standpoint. And you'll even realize higher ROI on your investment in buying an Narmi or a like-minded solution if you have those hires. Because I don't expect Brian to be sitting there as a CEO to be a product whiz, right? That's not what Brian should be doing. But on his team, and I'm sure he's done this, I know he's done this, more product-minded people typically do help a bank's cause. And I'm more than happy, to provide, guidance on what that person looks like, sample job descriptions. A lot of, also, sorry, I'm going on and on. A lot of banks already have this person in-house, by the way. They might just not be properly staffed or properly used on this. And I know for a fact it's a very high growth type of role that banks are hiring for right now. In fact, we've also helped some folks, get involved here. So that would be like my general approach to how to create, and it doesn't replace the top-down approach I opened with. I think if the CEO and C-suite's not bought in, last thing you want to do is bring in this digital product or product owner, and not let them do anything or let them actually like get stuff done. I mean, then you're just really, then you're almost faking it, which is worse. So yeah, those would be my thoughts.
One thing, Keith, I'd jump in. This is where your partners are crucial on all ends, to the delivery to the client, but then the tracking on the back side and the reconciling. We've all looked at CRM models, and if you try to find optimal efficiency there, but if you don't, you're just out that upside. If you are not aligned with the right partners and systems here, you're going to put yourself in a tough position in relation to risk and reconciling accounts and KYC type stuff. So this is where the partner choices, to Nikhil's point, to be out there, you're not going to create these systems entirely. you need to partner and have your people in-house that understand how they need to connect and how they need to come together. Because the downside is if you don't execute, you are going to find yourself, rightfully so, subject to regulator scrutiny in terms of delivery, to that same level of the customer walking through your door versus that customer never making it ever in 5 to 10 years their way into a branch. And you have to validate those same things on the BSA and AML side of the equation on that end. So your partner choices here are vital in the people, the talent to understand truly what the role is. And it's a little bit different than a marketing program or other things in the bank that, okay, if it didn't hit the marks, oh well, these you have to really work hard to hit the marks.
Yeah, and Nikhil, it really is a true partnership. I think the communication, understanding, the issues from both the community bank side, credit union side, and Narmi side, it's so critical to have that and not look at it as a vendor, but hey, this is a complete partnership. Let's work on this together, to achieve those goals. But no, thank you very much. No, great conversation on definitely the roles, the talent is changing so quickly. And that kind of brings me to the next section, trends in the industry. So I recently got back from Las Vegas, Money 2020. It was my first Money 2020. And I was like a kid in Disney World when I was 8 years old, just kind of like looking around in awe at all these different vendors, all these different types of technology, from blockchain, crypto, just biogenetic, risk management, and it's just incredible. And I think we're moving at such a fast pace. I'd love to hear, and I'll start with you, Nikhil, kind of what trends are you seeing in the industry? What's coming down the road over the next few years that are going to be crucial skill sets for community banks and also fintechs to kind of keep up with the changing culture and the changing consumer behavior out there?
Yeah, a few things there. Obviously, I'm biased. Our entire company is built around the shift towards digital. The fact that we believe the next decade banks will do the majority of their business digitally, will drive the majority of their bottom line digitally. Like that is, again, you ask any Narmi employee, that is another belief they will have. I think just your question itself kind of answers it, where everything you mentioned, crypto or biometric AI, which I don't even know is a thing, but some VC probably came up with it, is probably like multiple billion-dollar companies in itself. So there's not one thing. It's really hard to like zero down on one thing. And I would definitely recommend an element of focus at your bank. I don't think you should, try to do all of it, because I've seen some try, and then maybe you get 10% of all of them, and in reality, you have really little to show for it. I think what Brian's done on the BaaS side, I mean, he's purposely chosen to go all in on that type of business model, and it's working, like, clearly. So I got to give a lot of credit to him and his team for that. But to answer your questions, what is Narmi excited by the next 5-10 years? Besides like the general shift to digital, I'd say definitely on the business and commercial side, there's severe, even all the things you mentioned, crypto and biometrics and PFM and account, financial health, all of that historically the last 5-10 years, and I would say even looking forward the next 2-5 years, has been consumer retail driven, which there's nothing wrong with, but I think there's a reason for that. That's because it's been the fintechs driving most of that innovation, and the raw market size from a customer base is just far larger. I mean, there's 350, 400 million people here. So that's why they focused on consumer, but the innovation on the business side has been lacking. And when you think about regional community banks, I mean, the majority of them are commercial banks. Of course, many of them have retail presence, but and we all know how important our business clients are to us as banks. So we need that innovation on the business side, making payments easier, making the user experience easier, seamless business account opening, seamless KYC on the businesses. Can you actually digitize a business's banking experience where they don't ever have to come into a branch? I mean, Narmi, we've already done it. It's not even that we believe it. We've already done it, and we're continuing to double down on that. So that is very important. I would say number 2 is deeper level engagement. A lot of non-financial apps do this really, really well. Dining apps, food delivery apps, Postmates or DoorDash, the push notification that says, hey, millennial, get 20%. We notice you haven't come back in 2 weeks. Here's 20% off your next new order. That works. Banks don't do that. So, I would say a very tailored approach to personalization and engagement through digital is a huge trend. And you really need your mobile online banking provider to know what's going on there. Otherwise, I think you'll be caught in the dark. So those are some themes that we're super excited about and spent a lot of time on, and obviously have dedicated R&D efforts to, and we'll continue to do so. So yeah.
No, thanks, Nikhil. Yeah, personalization seems to be a buzzword because everything we do now is personalized. Amazon updates, like you were just talking about food apps. I just got a update from Slice. They're like, oh, you haven't ordered from this pizza place in the last 2 weeks, or it knows when I usually order pizza on Friday or something. So those type of things. But Brian, from your standpoint, what's, without giving away the secret sauce or anything, what's kind of your focus over the next few years in terms of new trends, technology, as Nikhil was mentioning, small business, digital transformation? Do you have any kind of thoughts on the trends in the industry right now?
Yeah, I think where, so to speak, the battle play out, and you see this right from the traditional commercial bank setting or even the corporate big banks dipping down in our space right now. Everybody's chasing yield. And so drives down pricing on loans and covenants on loans, and things are loosened up to chase that yield. This is a new space. We are trying to establish, I don't know if we quite would say we're a Starbucks model where we gain that much premium on a cup of coffee, but we want to get value for the service that we're providing. But it's challenging, right? Because the customer wants everything for free. But we say there's a lot of toll takers in between and moving money around and a lot of hands in the cookie jar. How can we eliminate as many toll takers as possible and execute on that, but still do it from a risk proportion reward standpoint on that end of it? Sometimes loans on our traditional portfolio, or we're in the insurance and the wealth business on that end of it. They have set margins in the business. Can we achieve margins in the fintech space to compensate for the risk associated with ACH risk and fraud and things of that nature? From that standpoint, that is the model of service we're trying to deliver and execute on. But it's going to be challenging because as more banks chase into the space, just like chasing yields on the loans, loan rates continue to go lower to chase that business. And so I would just challenge the bank CEOs there again to really look at a complete business model, because maybe you do just have a deposit gathering because you do need liquidity. Not a lot of us do, given the government influx of money, but I know going in pre-COVID, that was one of our initiatives and our drivers. Beyond going where the customer is, we need to gain deposits because we have great loan demand. So if that's your strategy, great. Or if you're a transactional based bank that's delivering in fintech, understand the model and the fully loaded costs and risk associated with delivering that model. And so I think the banks that look to that resources and where the industry and the customer is going, And sometimes you learn, tuition's always expensive, as we always say in this business. There will be some tuition lessons on that end of it. Plan for it, budget for it, because you don't want to set yourself up when a board of directors that you're working with and you're trying to convince them that this is the path, either to invest in fintech from an equity or be a player in the space. You should over prep on those areas of budget, investment, and things. And because if, as I told my board 5 years ago, if the first 3 flop, please don't quit on me, because you get scared, because we might lost $1 million, $2 million, $3 million. This is a long-term play, and we need to prep for it on that end of it. But board members, what have you done for me lately? Monday morning quarterbacking. Those are big challenges for a CEO. So I would just really advise to look at a elongated picture. This is a rapidly moving space, but you need to have a long-term perspective game plan and investment plan and stick with it, I think, to be successful.
Great ideas, Brian. Those ups and downs, you can get from month to month can leave, especially board members, like, what are we doing here? But stick with that plan and, go forward and, partner with the right partners like Narmi. So we'll come to the last section here, and I want to thank the audience. And this is something, we love to talk about with all our guests. And I'll start with you, Nikhil. What are some firms or leaders that you really admire, and also firms you're trying to kind of emulate out there in the industry right now? Do you have, firms you look to and say, wow, they're just doing a great job in so many different areas, or from a leadership perspective, since you're, CEO and co-founder, are there leaders that you look to also?
Yeah, I think inspiration is critical. You're not going to figure it out on your own. It's so important to learn from others. One that consistently comes up at Narmi all the time is Stripe. So for those of you that don't know, Stripe is a payments company, and they've really made e-commerce possible. Anytime you go to an e-commerce site and click checkout and enter your card information, there's, at this point, it's probably a pretty good chance that Stripe's powering the back end of it. So it's not a household name, but everything they do, in our opinion, and not everything, but so many of the things they do is just done with a really high degree of excellence. Everything from their blog to their developer documentation, to even how their API is constructed, to how they do marketing, to how they market their products, to what their products are, to how they do pricing, is really, really well done. And we have a lot of respect for that company. They're obviously, I think they're probably like a top 100, in terms of value, or they've done quite well. We actually had their former COO speak at our 5-year anniversary, and really, gave the team a great sense of how they scaled so quickly. Talked a lot about culture and hiring, as I'm sure you know why. So I would say that that's a company we admire a lot and try to take from. So yeah.
That's great. And Brian, on your end, do you have any, banks you look to as kind of, you would like to emulate them, or leaders in the industry, whether it's community banking or fintech, that kind of, inspire you to move forward with choice and, change and grow?
Yeah, I think what we've noticed, the trend of the fintechs and the software behind to deliver from, pay a couple days ahead, knowing what's coming. That quasi, is it lending to extent, but it's not longer term risk lending. There's been other banks that we've worked with, across the country in terms of collaborating, talking. Some of them, like Cross River, are heavy into the lending platform. And then there's folks like Cash App, they spent a significant amount of money. I think it was like upwards of 29 billion. Knowing, I don't know if they know exactly where they were going, but they wanted it in their platform and portfolio to continue to try to drive that growth. And so for us, you have to pay attention to the product delivery on that end. So for instance, somebody like our partner Current that deals in the prepaid debits, that is a different delivery and expectation versus somebody who's moving money P2P. And you need to understand as a bank what goes on into that, and that probably will carry over to the crypto space and certainly the blockchain space as well. And so how active the Fed gets into that to determine that, or what I see in the trends right now where Chair McWilliams, we're an FDIC regulated bank, her personal story of coming into the country has played into her being very pro fintech in terms of accessibility, which is one of the missions to the underbanked. She is a huge player into driving the willingness to try to collaborate with regulators to get this figured out, because it's new to them, versus where the OCC maybe is undertaking more discussion and maybe a different take or a different version of how to execute and regulate with fintech space. And so those are the trends that we're really paying attention to, because they are so fluid, and we try to collaborate with our regulators so we're on the same page with them as best possible, and listening to them and having them be a partner at the table as well. And so that's really where we're paying attention to, what are these companies doing on the fintech side for the next wave of delivery. And we need to be there with them to be able to execute on their behalf. So we are being accountable, because where Nikhil opened up, our charter, the FDIC insurance behind, that is a core foundation of this whole equation at this point. And so that's where early on for choice, it was an easy choice on the for the pun on there. Are we going to try to buck this, or are we going to get on board and try to collaborate with what we bring to the table? Because the other thing about those fintechs, and you'll notice this continually, is they are innovators, and they don't want to deal with everything else. They want to deliver for the customer. And, at a bank, we have a big, broad infrastructure. And so hopefully that is what we bring to the table for them, that stability, that execution, the accessibility of a bank of our size at 3 billion, for Nikhil to call up the CEO of that bank and get me at choice anytime he wants. That's important to fintech partners, because they want execution and they want results, and they want to grow customers, because that's where their market cap goes up and their valuation goes up. And so that's where we continue to try to assess where they're at and where they're going, and can we be there with them in having, reasonable, moderated, well-managed growth ourselves on that end of it.
No, that's great, Brian. And you brought up Jelena McWilliams. She was at Money 2020. I've heard her speak a few times now over the past couple of years, and she's great, looking for new innovation and ways to work with fintechs and build out these regulations. And here at Trevillian, we're getting a lot of searches and placements from the compliance risk end, but people that understand this new market of fintech relationships, BaaS banking, crypto. It's not kind of the old school just risk. There's so many different layers now. Partnering with fintechs, that you need somebody who's innovative at the compliance and risk level too. Well, thank you both. I can't thank you enough. I know we're in November right now, and it's budget season, and people are planning for 2022 on the bank side, on the fintech side. So I think this was a very crucial discussion as banks and credit unions are thinking about their plan for next year. Nikhil, best way to reach you or somebody at Narmi if a bank or credit union wants to discuss kind of next steps or just have a talk with you?
And again, no hidden agenda here, really.
Yeah, of course.
All of this together. So feel free to reach out, nikhil@narmi.com. We'll keep it simple. That's the cool part about being the first employee 6 years ago. You get to kind of pick your own email address. So again, that's nikhil@narmi.com. if I'm not the right person to speak to you about what you're looking for, I'm more than happy to loop in one of our wonderful teammates, team members. So
That's great.
thanks again for having me, Keith. Yeah.
And Brian, I know I don't want to, have the CEO both of you getting inundated with emails, but is there a way to reach you if they have a question about BaaS banking or, fintech partnerships? Maybe they're looking to move into that industry. Is there a good way to contact you?
Yeah, we look to grow our fintech partnerships on that end of it, and we do get a lot of outreach. It's a small community, and that your reputation is built and known. So yeah, for me, it's just head out there to Bank with Choice, and my email address posted, my numbers posted on that end of it, and we have a whole team taking in those calls and like to have that. At times we collaborate with other banks too as well across the country, and yeah, so I'm available.
That's great. And I just want to finish with something you said before, Nikhil. We're all in this together. Here at Trevillian, we love community banks. We want them to thrive and grow in this digital era. And there's firms like Narmi, Brian's bank is doing it, where you can compete. And it can be a little overwhelming sometimes, maybe, with all the new technology out there and partnerships. But to have resources and collaboration and contacts out there giving you information on how to succeed, it's fantastic. And it's a community, and we want to see the community banks thrive. But thank you, everybody, for joining us today. Really appreciate it. Nikhil, Brian, always great. I know you're both very busy, so I'll let you get back to whatever's going on in your respective lives. And thank you very much. And I'll talk to you soon.
All right. Pleasure.
Thank you. Take care.
Thanks, guys.